Welcome back to TechKidFX for another Fantom price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Fantom chart, which at the time of this recording has continued to hold above our key area of support at around the $0.5 mark. We have also lost the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also made a peak at around the $0.6 mark after seeing a breakout out of this chart pattern, which is a double bottom, whose target areas at around the $0.579 mark we have fully maximized. And after seeing that peak, we are seeing a bit of a retracement over here, and this chart pattern down here was formed after we fully maximized our target areas to the lower side in the formation of this larger Elliot wave count 2 right here in yellow. And I now believe that whatever we are seeing at the moment is the start of a massive bounce to the upside in the formation of a larger Elliot wave count 3 to the upside. And before I get further into the technical analysis and also give you my next price targets to the upside in the formation of that wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after making our low down there at around the $0.16 mark, we started this massive bounce to the upside, obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in red, having the first wave making its peak at around the $0.26 mark. And after seeing that high, we saw a corrective structure giving us the low for that wave 2, then another bounce to the upside giving us the peak for that wave 3 at around the $0.3575 mark. Then we saw a wave 4, then continued pushing even higher in a move that has now given us a peak in the formation of that wave 5 at around the $0.657 mark. And after seeing these 5 wave structure to the upside in red over here, that completed an even larger Elliot wave count 1 to the upside of this Elliot wave structure right here in yellow. And after seeing the formation of a larger Elliot wave count 1, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2, and using the Fibonacci's connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.382 and the fib level 0.5, which lies between the $0.4693 mark and the $0.4114 mark. And it is within that red target area down here that I was expecting to see the low for that second wave to the lower side, which is a target area that we have now fully maximized and made our low at around the $0.414 mark. And right now we are seeing the start of a massive bounce to the upside in the formation of this wave 3, and sketching out minimum target areas to the upside in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.2082 mark. And that is the minimum that I'm expecting that higher Elliot wave count 3 to the upside to do. And in the formation of that higher Elliot wave count 3, which is an impulsive wave, I'm also expecting to see a 5 wave structure in formation within the formation of that higher Elliot wave count 3, having the wave 5 of the fractal wave fully maximizing our target areas in the formation of that larger Elliot wave count 3. And I believe we are seeing such a movement here on the charts, where if I zoom in, you can see that after making our low in the formation of that wave 2 at around the $0.414 mark, we started this massive bounce to the upside, obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in red, having that as the first wave to the upside, making its peak at around the $0.6 mark. And after seeing the high for that wave 1, whatever we expect here on the short term scenarios is a bit of a corrective structure in the formation of these Elliot wave count 2, and using the Fibonacci's connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, and I can mark that target area here on the charts like that, which lies between the $0.5068 mark and the $0.4844 mark, which is a target area that we are yet to fully maximize. And you can see that we have continued to push even lower in a move that could be giving us a new low in the formation of these higher Elliot wave count 2. And once the low for this second wave is in, then we can expect a massive bounce to the upside in the formation of this wave 3. And for us to fully maximize our target area, there are key areas of support that are within this target area, and that key area of support is at around the $0.5 mark. So there are chances that in case we continue hammering into this red target area, there are chances of losing the key area of support at around the $0.5 mark. And in case that happens, then we can fully maximize our target area by making a low at around the 0.4 $0.4847 mark, and you can see that at some time earlier we had made a low at around the $0.4923 mark, and that means that we have almost fully maximized our target area by making a low at around the $0.4923 mark, and soon we can expect a reversal in prices over here, continue pushing even higher, see a break above the 20-day MA, have the support that we need for us to continue gearing up, see a break above the wave 1 high at around the $0.6 mark, and once that happens, then we can continue pushing even higher to fully maximize our target areas to the upside in the formation of this wave 3, which is a fractal wave within the formation of that larger Elliot wave count 3. And assuming that we have seen our low at around the $0.49 mark, we can sketch out a minimum target area to the upside in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.7976 mark, and that is the minimum that I will expect that wave 3 to the upside to do. So over here, having the low at around the $0.49 mark, that gives me the first possible scenario. We might have seen the low for this second wave, and our target area is now at around the $0.79 mark in the formation of that wave 3. But for that move to also play out, we need some few confirmations, and the first one is a break above the 20-day MA, and also a break above the wave 1 high at around the $0.6 mark. But as long as we continue holding below the 20-day MA and maybe lose the key area of support at around the $0.5 mark, then that could mean we have the risk of making one more new low in the formation of that wave 2, and once that happens, then we can term that as the new low for that second wave, and then from there we can expect that massive bounce to the upside in the formation of that wave 3. So we need to continue watching the key area of support at around the $0.5 mark, because if we lose it, then we have the risk of making one more new low in the formation of that wave 2. But at the moment, we have made a very significant low at around the $0.49 mark in the formation of that wave 2, and there are chances of having a reversal soon, continue gearing up in the formation of that wave 3. So those are the two possible scenarios, and you need to continue watching the 20-day MA and also the key area of support at around the $0.5 mark, because those are the areas that are going to give us the confirmations whether we are going to see one more new low or we are going to continue gearing up to see higher prices in the formation of that wave 3. So that is what I'm expecting here on the short-term scenarios. And before I give you the long-term scenarios that I'm expecting to play out, we can first take a look at the indicators, where on the RSI you can see that we are trading at around the 38 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 3. But in case we continue seeing lower prices here on the RSI, such a movement to still be supported. Also taking a look at the MACD, we have been able to print a bearish cross, and we're also seeing a bit of an increase in the selling momentum, suggesting that we might see one more new low in the formation of that wave 2, then expect that massive bounce to the upside in the formation of that wave 3. And jumping to the daily chart to give you the long-term scenarios that I'm expecting to play out, basing it on the Elliot wave structures. Here on the daily chart, you can see that from these low prices that we had been trading within, we saw that massive bounce to the upside, seeing the all-time high at around the $3.5 mark in what I'm terming as that first wave to the upside. And after seeing the all-time high, we started the bear market, where we had been seeing lower prices in this ABC corrective structure in a move that gave us a low at around the $0.015 mark in what I'm terming as the low for that second wave. And after seeing the low for that second wave, whatever we expect on the long-term scenarios is that massive bounce to the upside in the formation of that wave 3, where I have minimum target areas in the formation of that wave 3 at the fib level 1.618, and that is at around the $5.7395 mark, and that is the minimum that I will expect that larger Elliot wave count 3 here on the daily chart to do. And that is what I'm expecting on the long-term scenarios and also on the short-term scenarios. And let's be patient and see how that plays out, and I'll be keeping you updated.